Hello, and welcome to the stock specific class here for Thursday, April the 14th. Just a quick reminder, the market is closed tomorrow. So if you have trades that maybe you were planning on getting out of tomorrow, you need to get out of them today. Or if you're planning to get into a trade tomorrow, today would be the day that you need to get in. So just be aware of that, especially if you're trading options. The option expiration, which is typically on Fridays, will now be, they'll expire at the end of today. So just make sure you're aware of that. And if you have any questions during the week or that I don't get to in the live class here, make sure you send those to jerry@traderspro.com. Kind of a funny day today, although, you tend to get these light volume days before a holiday. And so, you see it all the time, before Christmas, before Thanksgiving, where professional traders are using that day off to go on vacations. And I know how valuable that is. You don't get many days off in the markets. It's basically 5 days a week, every week. And so when you do get a chance to have the market closed and have a long weekend, these professional traders take advantage of that. So that doesn't mean they don't trade at all, but usually they start lightening up on their trading. And unless they have to do something, they don't do it until they get back. And so you got to be careful on days like this that you don't overreact to the price movement because the fact that the volume is so light. Because when volume is really like that, you can get big price swings because there's just a lack of liquidity. There's not as many buyers and sellers, and so you can get a little bit more volatility in the price action. So just wanted to note that here. Now, quickly looking at the direction alerts. Again, nothing's really changed since Tuesday. We're right in the middle of momentum right here. Breadth is still kind of right in the middle, no extremes there. Sentiment is still really high. We're already aware of that. So let's kind of just skip over to the chart. Like I said, there's really nothing in the alerts there that's signaling anything significant. And question, Traders Pro article section always recommends stocks like trade of the day, etc. You don't appear to be buying any of these in my portfolio. I could add those in. They're designed for people that just want trade. There's a lot of things that are on the system that are designed just to automatically program trades in for people that just want something to trade. And so it'll take, what that will do is just automatically take a stock off of one of the lists, one of the scans it's running, and just populate it into that. Now, I say this a lot. This is one of the reasons why I usually have a different audience when I'm teaching these classes, because most people that are in these classes want to learn how to trade themselves. They want to learn how to make their own decisions and use the software to assist in that. Obviously, the software can also be designed to narrow the search for stocks, but there are traders that just want, I don't want to do anything. I just want to go to the site, pick a stock on the top of the list, go buy it. I'm a doctor. I've got other things I'm doing, and I don't have time to learn how to analyze a stock and all that other stuff. I'm using the algorithms to tell me what to buy. But like I said, in these classes, I'm dealing with a crowd that typically wants to learn how to do it themselves. And so what we're doing is we're kind of following an approach where we're looking for the market conditions, which is what I'm doing right now, going through and taking a look at what the market conditions are. Then we're looking at the outperforming sectors and then the outperforming stocks within those sectors. And within those stocks, we're learning how to recognize chart patterns, price action, those little things that can give you that edge and will make you a better trader. I promise you, if you learn how to be a better trader, you'll get better results than someone that just wants a software to pick the stocks. Okay. Now, software is great. Algorithms are great. Computers have revolutionized trading, but there is no algorithm, there is no computer program that'll automatically pick every winning stock, and you'll never have losing trades. So you're going to get better results overall the more skilled you get at what you're doing. And so hopefully that answers your question. But yeah, and when I get asked a lot of questions, sometimes I can get caught in questions involving other traders that people are following, and that I'm looking at something different than what they are, or I'm recommending something different than what they are. Every trader can have different opinions too, and it can depend on the time frame that they're trading as well. There could be a stock that might look like it's going to go up over the next 6 months, but in the next few days, it looks like it's going to drop in the next few days. Well, I might have a short-term bearish trade, and I could be right, and the person recommending that stock for the long term could also be right. It's just he's not worrying about the near-term fluctuations, and so it can depend on context as well. Hopefully that makes a little bit of sense. All right. Now, one thing, let's throw the volume bars up here so you can see. You can see the lighter volume here today. Now, what I was looking at this morning was I thought, based on yesterday's price action, we had the bearish candle on Tuesday, then we had this bullish reversal candle yesterday, and I thought for sure we were going to open higher off of that, and at least maybe gap up, or even have a day that was up today. Either we opened where we did and we were going to go higher off of that candle, or we were going to gap up and then start to go lower, which would have been a bearish reversal. I was hoping for this because I had some short-term bullish trades overnight that I was just trying to profit off of a possible gap up. And then if I did get that bearish reversal candle, I wanted to buy some put options, expecting that the market was heading lower. The way it's behaving right now, it's still acting like it wants to go lower. All you have to do is just look at basic trend analysis. You had an impulsive move down, a couple of days where it's more corrective or sideways, another impulsive move down, a couple of days where it's corrective or sideways, another impulsive move down, a few days this week where it's just been kind of sideways. Ultimately, when this is done, we should have another drop. In the meantime, though, like I said, it was looking pretty probable that we would have a move up today. We didn't. So even though today's looking very bearish and looking like it could drop immediately, it's still possible that we get a little bit of a head fake, and maybe we do get that gap up on Monday and then get a bearish reversal. That would fill in this gap right here, and then we could be off to the races to the downside if that were to take place. So what I'm looking at right now is ultimately we should move lower. The question is, how soon or how it plays out. That's always hard to predict. You can always get a day or two where it attempts to rally, and it could change. You could get a really strong up day, a few up days or something, and start getting towards this high right here where you have to then start to look at this as being a corrective move. Now, we were looking at that as a possible corrective move. I talked about this on Tuesday. Last week we were looking at the possibility that could be a bullish ABC pattern, that maybe we move higher from there. Obviously that failed, and like I said, it's acting like it still has further to drop, and that's what I'm expecting. So how does that impact trades? Well, again, we want to kind of work on our watch list, or even find stocks that are trending up in this environment. Those are ones that you could buy into. Again, the sectors that we've really been focusing on, energy has worked out well. Those trades have worked out well. Aerospace, and there's a few other sectors we're going to get in today. We're going to focus on today. Two sectors we're going to focus on today that have some good patterns in those that are performing pretty well in this environment. And whether we get into those trades or not, the big thing is to build your list so when you're ready. So when we do bottom out and when it looks like we're going to move higher, you want to have that list ready to go. Now, you look at the Dow. The Dow is up, but it did kind of what I was expecting the other indexes to do, where it gapped up a little bit, actually ran all the way up to here, and then it's faded. So although it's showing it's up for the day, slightly, it's showing it's up for the day, it's still down compared to where it opened, which is a bearish reversal price action. Although this is a little bit more of an indecision candle right here. We call that a spinning top. But in the context of everything else, the other indexes, I would assume that indecision is reflecting another move lower, or reversing that upward move from yesterday. NASDAQ, again, has been beaten up pretty good today. And again, I'm still keeping a close eye on those chip stocks and the transports. We'll take a look at those charts here in just a second. Russell 2000, again, this looks pretty bearish the way it's trading today. And this could change going into the close. That's why, usually my main assessment of how the day looks is during that last hour of the market, particularly last half hour of the market, and gives you a little bit better idea of what those candles are going to look like at the close. Bonds are still moving lower, which means those bond yields are still going higher. They're getting into that extreme reversal risk. So we talked about this on Tuesday when we were right in here, that we're due for a little bit of a bounce. We didn't really get it, although you could call this little sideways move right here a little bit of that consolidation. It wasn't much of a bounce. Didn't really get us off of that oversold area very much. But the trend is still clearly down, and so any one of these rallies, you're going to be looking to fade or expect that they're going to continue to move down until it stops acting that way. And yes, you can make the argument we already dropped quite a bit. Could we be near a bottom in bonds? Yeah, it's possible, but in fact, what you could do is we can go to a 2-year chart, see if there's any support in this area that might. We'd have to go back further than that because we've been trending down longer than 2 years, and I don't want to take the time to do that. But you could look to see on a longer term chart if there's any long-term support near this area that you think it could be a possible bottom. Gold now. I told you that gold has been kind of indecisive. It's kind of been moving sideways in this range. We did kind of break out here. But if you're looking to trade gold, and you look at the very near term, it is acting like an uptrend in the very near term. Here's an impulsive move up, corrective, impulsive up. This could be a little bit of a correction right here. It's kind of stair-stepping up right now. But it's a better trade if you are trading gold. Instead of trading the GLD, is to trade the gold miners. And you can trade them as a group or individually, but as a group, you'd trade the GDX. And they are clearly trending upward, and for good reason. These gold miners are making a ton of money with gold at these prices right now, and they're going to continue to make a ton of money in this environment. So I expect that trend to continue to move up. Now we are kind of in that extreme reversal risk area. I'm not saying you have to jump in and chase it, but any sort of a pullback, you get a little bit of a pullback like this or like this, you might want to consider that if you're trading gold. I'd rather trade the gold miners right now than trade gold. So if you're looking for a gold trade, you're better off, I think, with the GDX than the GLD. And oil's continuing to move higher. Again, this looks like an impulsive move up. This looks like a corrective ABC, and this looks like we're in another impulsive move up. Now, maybe it stalls out up here like the others have, and we still kind of stay in this range. but at least in the very near term, it's looking like oil's going higher, and that's going to tend to be more bearish for the markets when that happens, just because higher oil affects so many different areas of the economy that, everyone's feeling it right now. Every time you go to the gas pump, it'll have a negative effect on the rest of the market. Typically, right now, at least right now, it will. The dollar continues to move higher. VIX, I guess it's worth noting, you're getting you got a little bit of an indecision day. A couple hours ago, this was up near the highs right there. Was showing more of a bullish reversal, which would be bearish for the markets, because VIX goes up, typically the market's going down. But even the fact that it's giving you kind of that indecision candle right here, you have to keep an eye on that to see if that leads to a little bit of a spike. But bottom line, keep in mind too, the volume, like I mentioned at the beginning of the update, is very light. We don't want to read too much into what's going on today. I'd much rather wait to see how Monday looks before saying, oh, that we're definitely going lower, or we're definitely dropping right here, or the opposite. Maybe we start rallying next week. April tends to be a little bit more of a bullish month, so but we are in earnings season now, and the expectation is a lot of these earnings are going to be disappointing. They're going to be lowering guidance, things like that, and so it could end up that we end up with a negative reaction this month. Although it's amazing how the market has shaken off a lot of negative news already, so it wouldn't shock me if it continues to do that either. But we don't care about predicting, or we just want to forecast. We want to see what's happening and read what's happening. If it reverses into more of a bullish looking trend, and we want to trade that. And if it's remaining looking like it's remaining to be bearish, or looking like it could become more bearish, we want to be in more cash, or we want to be in stocks that could still go up even if the market goes down, which is kind of what we're in right now with the balance of the portfolio. Chip stocks, again, continuing to show weakness. And again, I emphasize that we're trading below that important bullish reversal day. It wasn't necessarily in the chip stocks, but it was this bullish reversal day was important in the S&P. And let's just go back to that real quick, just to remind everyone. If I've got someone new here, this was you can see right here that on the S&P, we haven't been below that bullish reversal day. We opened all the way down here. We closed up here after this drop. We haven't been below it here. We came close right in through here. I've talked about the fact that there's a lot of buyers right here that managed to push that up. They pushed it up over here as well, pushed it up over here as well. If we get below that, that's going to be significant. Well, again, the chip stocks and the transports have already broken below that low. They've already come down, and they tend to be leading indicators of the market, although not immediately. It doesn't mean the market's immediately going to follow them. It could be weeks before it follows them. So it's not an exact, and it's not guaranteed that it has to. It just that tends to be. That's why we look at them. They tend to be leading the way. They tend to be leading signals of the rest of the market. And so that's let's go back to that chip stock or the ETF here, the SMA. So you can see right here that we've traded below that a couple times. We traded below it here. Now we're trading below it again here, and then the transports are well below it, although they've rallied up a little bit the last couple days. So here, those same lows right here, we broke below it. Looks like, let me see, draw a line right through here. It looks like you had a lot of support in this area right into here. We broke through it. Now we're kind of back up there and getting a little bit of a indecision candle today. We'll see what happens there. We'll see if that ends up rolling over next week. And Bitcoin looks like it's heading lower as well. It has a little bit of a bearish reversal candle today. So a lot of negative looking conditions. I want to be aware of that as I go into making my trade decisions. So let's take a look at, first of all, let's take a look at the portfolio real quick. Got a lot of oil stocks, so I'm not going to be adding any more oil at this time. No need to get any more exposure than we already have there. OAS, though, again, I like just this whole corrective pattern right here. It looks like it's getting ready to break out again, make one of these runs. By the way, these oil stocks don't always move with oil. Some days you'll have oil up and the oil stocks will be down, or oil will be down one day and the oil stocks are up. So there's not always that day-to-day correlation where they're moving in the same direction. But with the expectation that oil is looking like it should continue to move higher, I would expect that these companies are making money and they should continue to trend higher as well. And then I've got my defensive stocks, Northrop, NOC. We've been just kind of moving sideways this week, but it makes sense. We're near a previous high right here. But it looks, this is what you like to see right near a previous high, because it usually means you're going to break out of it. When you run up to a previous high and you break out immediately, the problem with that is that typically it then comes back down to that area and then moves sideways. Usually it'll consolidate. At some point, you're usually going to consolidate around that high. In this case, we're consolidating. It looks like we're consolidating before we break out. And a lot of times when that happens, you can really take off. You can move pretty far off of that breakout. If you go back here, this is kind of what I'm talking about. Back here was the previous high. We ran up to it, consolidated, and then when you broke out, you could really go. You could take off. Kind of hoping to get kind of the same reaction over here when that finally takes off. And we still keep getting news of weapons being sent to Ukraine. I think that's going to continue, and whether it continues with Ukraine or other countries are starting to make orders because they're looking at their, you've got is it Finland and Sweden? There's a couple of those countries up there that are trying now to possibly get into NATO, and at the very least, they're probably thinking about stockpiling weapons. They don't want to be caught without any defense, and I think the whole world is recognizing that. And one of the leading producers of weapons is the U.S. So these companies, I just see that they're going to be making money for a while, and they're relatively undervalued for the most part. And so I want to continue to hold these. And who knows, if the chart starts falling apart, I'm not going to continue to hold them just because I think they're going to continue to move up in the long run. Obviously, I'm going to trade them based on what the chart does, but there's definitely reasons to be optimistic on a lot of these stocks, which is why I've got a lot of them in the portfolio. Lockheed Martin, same thing again. We're back up to these previous highs. You're kind of consolidating. That's when you can get that breakout. LHX still looks good. MOH. Now this was kind of a biotech or healthcare type stocks. We have a little bit of diversification in the portfolio there. Again, I like this consolidation right through here. Usually when it breaks out, it can really take off. You can see what happened before. It came up to a previous high, consolidated, and broke out. And in this case, what it did is it broke out, consolidated, broke out, and what used to be the ceiling right here became the floor. And that's always good. That's a good bullish sign. It's up today in a down market, so that's a good. We've got some good positions here. Their Marathon, another oil stock that recently broke out. Devon, yeah, I've got a lot of oil, probably maybe too much oil. I'm still holding because of the the chip sector still looks pretty bearish. It did look like it could have reversed. That was a bearish reversal candle yesterday, but it came right back to a bullish looking candle today. We made a lot of money trading these inverse ETFs, and there's a reason why I picked these over the traditional market inverse ETFs. I think I talked about that before. You know, these regular market ETFs like the SH, it's going up as well, but on that move up from the bottom, you know, if you got in at 1380, 1375, you haven't even gone up $1 yet on that move. You're just not making any money on it. You're making some, but it's very small compared to the SOX that went from $31 up to 52s, made a $20 move. So I like these ones a little bit better when you're trading, when you're expecting the market to drop and you're expecting these to go up in value. When the market drops, they're a little bit better inverse trades. And then SARK, this is the opposite of the ARK Innovation Fund, the inverse of the ARK Innovation Fund. And although it looked like it had a bearish reversal yesterday, it's back to looking more bullish today. And just overall, it's moved sideways. Previous move was up. It's looking like it should continue to go higher. So those are all looking pretty good. We do have a little bit of capital, 28,000. Now I've got a choice to make. What I think I'm going to do is, well, I don't know. I still think we're okay. I think if oil turns in any way, we can quickly lighten up on some of the oil, not have as much exposure there. I just don't see it collapsing to where we'd be giving back all the profits we made quickly. It could happen, but I might just go ahead and add a couple trades into this. But I don't like to be all in, especially when I think the market's going to drop. But like I said, some of these patterns look really good. They've held up pretty well. And the ones I'm about to go over with you, well, we'll see. I'll see if I can, because again, it could have been, things could have changed between when I did my prep for the class and how things look now. But let's go ahead and look at some stocks. The two sectors I'm going to focus on, and again, you say, well, why aren't we focusing on the top sectors at the top of the list here? Well, we have. I've got a ton of oil stocks already in there. I've got a ton of aerospace already in there. You know, I don't like utilities unless you're just trading them for the dividends. That's just me, but you could, if you did want to find some utility stocks to add, you could do the same process and add those. That's just kind of my personal preference, not to focus on those. I'm going to come down the list a little bit, and I'm going to be looking at basic materials and industrial products. I found some good patterns in these scans. And so under the hold section of basic materials, and again, the reason why I'm looking at the hold section is because if I find a nice pattern, it should have a hold signal, and then I'm waiting for it to go from hold to buy, although some of these have gone, look like they've gone to buy today. Remember, all these are updated overnight, so it's possible some of these have a buy signal right now, but that could change. I've seen buy signals, and then at the end of the day, they fade and they're back to a hold signal. So that's why the system waits till the end of the day and then it updates. If it does go to a buy signal, it holds it through the end of the day, then overnight it'll move it into the buy signal list. It'll come out of the hold signal and move into the buy signal list. So, but anyway, in this group here, I like Cleveland Cliffs, CLF, 95 strength rank. We can switch this over to signals here. But again, you can see you have the nice trending move up, and then we've been consolidating. It's more of a corrective type pattern right here. Now, It is a little bit of a bearish day today. Could we still move a little bit lower and then ultimately still go higher? Yes, but that's why I'm going to put this in a watch list. Because if it doesn't, if it reverses this somehow next week and goes to a buy signal, especially if it starts to break out, I'd want to probably jump on this thing. So we're going to put this one in the watch list. Add to watch list. All right, then the next one under basic materials, U.S. Steel, X is the ticker symbol, 94 strength rank. And this is what I'm talking about. It has a buy signal right now, but it's also faded from the top. So if it fades some more, maybe it turns back into a hold signal before the market closes. So you'd have to watch that. And so, but I like this pattern, big run up. This looks like an ABC correction. And then it's going back, could be going back to a buy signal. This is one I might go ahead and add. I'll see how that looks. I don't like the fact that it's faded a lot though from the highs there. It faded even more from when I saw it during the prep. So I'll look at that again at the end of the update and make a decision on that, or I might end up having to wait till the end of the day to make a decision on that. But and there, to be honest, there wouldn't be much harm to wait till Monday as well, just because the real key is if it breaks out, that's really when you want to have usually a much stronger probability that you're going higher at that point, which isn't like it happened today. Another one in basic materials is this GFI Goldfields ETF right here, 92 strength rank, and it's got this, I like that kind of choppy corrective behavior, big run up right here. Now this one I definitely would want to go back to a buy signal or breakout to give me confirmation. It's looking like it could be going to a sell signal today based on the algorithm. So just want to make sure that that we're waiting for confirmation on that. That's a nice little pattern there that you'd want to put in your watch list. So let's go ahead and do that. And we can also put an alert on it too to tell us when it goes from hold to buy. And one more in basic materials. Where is it? This ASIX right here, 94 strength rank. And the same thing, you can see that's a nice little move up, and it's kind of been choppy as it's pulled back. It's kind of pulled back to this breakout area here. Doesn't really look strong moving higher here. These are a lot of indecision days right there, and so that's why maybe you wait for it to go, see if you can get back to a buy signals confirmation. But that one looks pretty good. Let's go ahead and add that to the watch list. And we can put an alert on it too. And then let's go into industrial products. Down a little bit lower right here into the hold section. And we already have this in the watch list, but this is one that I'm considering adding is Alcoa right here. Impulsive move up. This looks like a pretty distinct ABC correction. Maybe a little bit more than a 50% retracement, but it's right in that retracement zone. It's starting to move up. I like that pattern. And I like the reward to risk too. I'm going to put a tight stop on it right below here. Let me go ahead and add this one. The low of that day was $80.83. So I'm just going to put it right below that. I'll say $80.80. Make it real simple there. So let's add this to the portfolio. Stop price at $80.80. What would 100 shares look like? Oops. About almost 9,000 into the trade, and the portfolio at risk under 1%. So that's a good, like I said, that's a good risk amount there. And what you're trying to keep, I'm trying to keep each of these trades around that 7,000 to 9,000 range. So that fits into that. So let's go ahead and purchase that. Another one in industrial products. I like this CENX, Century Aluminum. Again, another aluminum company. Alcoa, this is another aluminum company. Kind of the same thing. You have impulsive up, kind of an ABC correction right here, about a 50% retracement of that, a little bit more than a 50% retracement of that move. And moving up pretty strongly right here. Question, is a portfolio tied to an actual brokerage account? No. And there's a reason for that. Legally, it's a reason for that. Otherwise, I could be accused of front running, getting into a stock and then telling everyone else to get into it, and it pushes it up. There are people that do that, and it's dishonest. And so this is just a virtual account to track this stuff. So yeah, just be aware of that. All right. And then one more. TWI right here, Titan International, 91 strength rank, getting down there a little bit low on the strength rank scale, but I like the pattern there. You got this impulsive move, and you see how it's kind of choppy through here, and it took off again. Now in this case, it barely broke out, but this is why I don't like it when it runs up and breaks out, because you have this, it can pull back below it again, or it can pull back to it, move sideways, but it pulled back here. Broke out again, and then looks like an ABC correction right here. And these lows are a little bit higher than where this area is right here, but it's kind of looks like it's retested that and it's taken off again. So it looks like a pretty healthy uptrend in the last few days. Again, the market's been dropping and it's been moving up pretty nicely. So it's going counter to what the market is doing. So that one looks pretty good as well. And you could wait for it to go to a buy signals confirmation. I do like the move off the lows and the overall trend. So I don't have a problem with someone getting in right here, and you get a stop right below here. You can keep your risk really, really small. That one looks like it's acting like it wants to go higher. And again, these are all outperforming in a market that's looking weaker. And so there's a reason for that. Inflation is really kicking up prices everywhere, and it's these companies are making a lot of money. Like gold, they're making a lot of more money, the gold miners are, than with the elevated prices. Oil companies are making a lot of money with the elevated oil prices. Almost anything commodity related right now is outperforming the market. I mean, you look at, I think I talked about this on Tuesday, but you look at Mosaic, which is a fertilizer company. It's just trending straight up because all the food prices are going up, and there's, and so there's, all the agricultural stocks are going nuts as well. IPI is another fertilizer company that's going parabolic, and ADM Archer Daniel Midland is a kind of a agricultural company, and again, those are trending up. So there are bull markets, even though the rest of the market is looking weak. I don't want to be in tech right now. I don't want to be in some of these retail right now. These are what are getting crushed. Consumer discretionary stocks. These are stocks that people buy with extra money. Well, nobody's got extra money right now because we're paying twice as much to fill up our cars with gas. So, we're not going out there and buying the new big screen TV or something like that. So, so we do have our portfolio loaded up a little bit here, but I think it looks like we're being smart in having it in the areas that are outperforming. I used to ask, why am I not in Archer Daniel Midland and some of these other stocks? Well, they've gone parabolic. I don't like to buy into parabolic moves because these things can come down just as quickly as they go up. But we're starting to see that interest in like aluminum and steel and things like that other commodities that could continue to have a run for at least a little bit until we see a change in it. So we see weakness in it, which we're just not seeing yet. Next question is, do you actually take the trades that you're doing? No, for that same reason. I'm not trading these on my own because otherwise I could be accused of front running. Now I could, and to be honest, it was some of these stocks are so big, and the positions would be probably relatively mild to where it wouldn't have that much of an effect on anything. But I just try to avoid any sort of look of impropriety. And besides, my personal trade, I tend to be more of a swing trader with options. I like to trade options, and so that's kind of where more of my expertise is at. And I'm trading both ways, up or down, with options that way. But these are good companies. So these are companies I'd love to jump into. I'm not going over any pattern that I wouldn't consider jumping. This is what I'm looking for my own trades, is these types of patterns. And if you, I think I'll tell you what, and I get this a lot. I've been doing this a long time, not only trading, but coaching and giving picks and things like that. I've done this for 20 years. And I went through this as a new trader myself. I came into trading believing that there was a way you could know exactly what the market was going to do, or particularly a stock. You could know that a stock is guaranteed to go up, and you just had to find the right smart person or the right trading algorithm or what have you. But I was always convinced that I was going to find the guy that could always, his picks were golden and they were always worked out. And I went from guru to guru to guru. And I think I found it. This guy would have 5 winning trades in a row. I'm like, I found it. This guy's smart. And then he'd have a few losing trades in a row, and then I'd get frustrated because I'd lose money. And what ended up happening, long story short, is you come to realize, whether you're going to realize it now if you're early in your trading career, or you're going to wait until 15 years have gone by and you've been beaten up before you finally realize it. Let me tell you right now the reality. The reality is you can't know exactly what stocks are going to go up. Now, we do our best to try to analyze it. You see me talk about ABC patterns. You see me talk about bullish and bearish candles that you can read. Here's an ABC pattern right here. We do our best to try to put as many of the probabilities in our favor that stock is going to go up. But that's only one aspect of a successful trading system. You have to then have a plan for the trade. Where's my stop? Am I going to put my stop down below here? You got to know where you're going to know you're wrong and stop out of the trade. The third aspect is your allocation, your money management. How much are you planning on losing if you're wrong? One thing you'll see me do on these all the time is when I add it to the portfolio. By the way, I've got a full training on these. Again, go to the YouTube channel, go to the Traders Pro page, and then look for the trade management classes and money management classes. But I'm going to put it in. I'm looking at the stop price. Let's just throw a random stop price in. Let's just say $90. It's telling me. So, and then let's say we're doing 100 shares. So I want to do 100 shares. Okay. I'm trying to keep the total amount I'm in the trade to a certain amount. In this case, typically it's going to be, for me, it's going to be anywhere typically between about $7,000 to $10,000. Again, with 100, this is based on a $100,000 account. So I don't want to have more than 10% in the trade total. That doesn't mean I'm wanting to lose or willing to risk that entire amount. That's where the distance between your entry and stop comes in. This is what I'm willing to risk right here. And that's what it's telling me down here on the lower part of the box. Is it's telling me if you get stopped out, and I want to keep this portfolio percentage, I want to keep that below 1.5%. I don't want to lose more than 1.5% if I'm wrong. Now, if I go through this trade, I'm risking a lot less than that. I'm risking roughly 0.7%, or $742. This is important right here. If I go do this trade and it doesn't work out, I'm going to lose $742. You better think about that for a second. Remember, not every trade is going to work out. Those of you who've been following me for a while, I get stopped out of trades. Are you going to be emotionally upset if you have really crazy upset if you have a $742 loss? If that's the case, then you've got to adjust it. Maybe you have to tighten your stop to get that risk amount down. Maybe you buy fewer shares to get that risk amount down. You better get that amount down to what you can handle. And if it's like, okay, I could not handle more than a $200 loss. I'm sorry, I just can't. Okay, then well, even 50 shares work. Well, I could do 50 shares, and maybe I could move my stop up a little bit to 94 or something like that, or 95. What's that look like? 93. Okay, there you are. That brought my risk amount down to 221. Now you got to be careful of just randomly moving your stop price down. I want to put my stop at a point where I know I'm wrong. And so I'm not going to randomly raise it if I know that's where I'm wrong. And it just means I might have to just buy fewer shares. But you got to get that amount down to what you can handle. Because if you're getting upset, I can always tell when people are trading wrong, because if I have a losing streak and they send me an angry email, Gary, you suck, and this is crazy. I've all I'm doing is losing money right here. I usually the first thing I realize is they're risking too much. That's usually the case, because typically I'm not going to have enough losing trades in a row to generate anger, unless they're putting too much. They're buying. Oh, Jerry must be right on this one, so I'm going to buy 500 shares. Well, guess what? If I was wrong, I was going to lose 700. You're going to lose 2,000. And I have, 3 losing trades in a row, you have a $6,000 loss. Yeah, you're going to be freaking out. But what was the problem? Well, there's 2 problems. Number one, you were thinking that every pick I go through in class is going to work out, so you risk too much, and you didn't accept the risk. And it's going to happen. You're going to have winning streaks and losing streaks. So, we call this a stock specific class, and the job here is to, let me cancel this before I forget. The job here is to give you some trade ideas, give you some stocks that I would love to do myself. I have high confidence they're going to move up. But that's only one aspect. You've got to make sure you have a trade management plan, a money management plan. And in this case, a lot of times I'm looking at my, I wanted to find my stop. Let me go to the U.S. Steel here, because we might add that one in. So here's where I think I would know I'm wrong if it dips down below here. Now, by the way, it doesn't necessarily mean that I am wrong, because this thing in these sideways moves, it could easily dip down below there and go back up again. But that would be, in this type of market condition, that's what I would be willing to risk. Okay. Now there's a number of different ways you can exit trades, and I go over those in those trainings. So make sure you go in and view those trainings if you want some of those ideas. Now, a lot of times I like to let it break out and run, and then when it starts to get overbought in kind of this extreme reversal risk range, then I look for some sort of bearish price action. And it could be that I get a bearish candle and say, okay, that's probably enough. Maybe I get this bearish candle right here and I said that maybe that's enough. Maybe I rode this trend all the way up. One you see me use a lot is a close below the low of the previous day. When you get in these moves, look at this move up right here. When did it close below the low? Not trade below the low of the previous day, but close below the low of the previous day. Boy, I don't even know if it did it there. It might have been, that would have been a judgment call. Here it clearly closed below the low of the previous day. And that might have been my signal to go ahead and get out. That is one exit strategy. You could wait for it to go back to a hold signal from a buy. Well, then you would have gotten out right in here. You could wait for it to go to a sell signal. I don't like that as an exit strategy, because a lot of times by the time it gets to that sell signal, you've given back a large chunk. But that's part of my curse too, is I can read price action, so I can tell when that trend is slowing down. And sometimes I jump out too soon. I did that on Tesla a little while back, where it had a big run and then had a bearish reversal candle. I got out and then it took off again. But I'm okay with that, because I know I still made money on it. I'll move on to the next trade and go manage the next trade. So I'm going to go ahead and get in this one, mostly just to add some diversity. So we've gotten to industrial products with Alcoa. This is basic materials with U.S. Steel, and that gives us a little bit more diversity in the portfolio. And so the stop here is going to be below. This is the lowest one right here. So what's that low? 34.89. So I'll just say 34.85. By the way, when you set these stops, it doesn't guarantee you're going to get stopped out at that price. It could, sometimes you'll get a really big down day, and by the time you see it, you're getting out, you're stopping out down here. Sometimes I like to wait till the end of the day to stop out in case it comes down below that and then comes roaring right back up again. If it comes roaring right back up again, that could be bullish. It could be telling me it's going to go higher. But until you can recognize some of these things I'm teaching you, you want to be pretty strict with a system. So if I can't recognize a bullish candle very well, or then as soon as it drops below that low, that's going to be your stop. I prefer those types of moves where you're looking for something. As soon as it does this, I'm getting out, or as soon as it does this, I'm getting in. That I think is critical early on in your trading, because you got to develop the discipline. But then once you know how to read a lot of stuff, like I said, it can sometimes be a curse, because you know the trend is still up, but you're recognizing the near term, though it can pull back a little bit, and you just don't want to give back any of the profits you've made, knowing you could always jump back in again. But there again, you bring in tax consequences, and some of you wouldn't want to jump in and out back and forth for tax reasons. So there's a lot of different things you can get into with a trading system. All right, and there aren't necessarily perfect ways to do it. That's another thing, is that there's a perception there's a perfect way to do it. I like the way I do it because it works and I can make money with it. But some of the way thing about trading is there's so many different ways about doing it. But what's common on every system, any successful trader, I can tell you what's common is they have a system for finding their trades. And again, that's usually where people will disagree. They've got a good trade management system, a good money management system. They have to. I've never met a successful trader that has a sucky trade management, money management system. I've met a ton of unsuccessful traders that have no trade management, money management system. All right, so let's get into this and get out of here. So again, I'm going to put my stop at 34.85. It's 100 shares. Oh, that's way low. So let's do 250. I don't really want to have 9,000. It's 200. I'll do about 7,000 in the trade there. And based on that entry and stop, portfolio at risk is only 0.5%. I'd only lose $512 if I'm wrong. Again, if that's too high, you got to adjust that. Now, because I'm typically putting about roughly 10,000 in each trade, and I'm usually trying to keep my portfolio at risk around 1.5%. That means that usually the max amount I would lose on a trade would be $1,500. Different. Oh, I got a question here. We started on doing the portfolio on July, end of July, right there, and it started with $100,000. If you're wondering why we're only back to 107, we started it right at we started it right in here, and we had this decline right through here. We had this decline, and then we had this big decline through here. Now, through all those declines, the lowest the account got down to was about 80,000. So I was down about 20,000. Why? Well, there's a couple of reasons why we didn't get killed. Is we when the markets were looking, when they were looking like they were going to drop, we went to cash. We were waiting for the drop to take place. We had capital to deploy down in this area, and that's what happened here. We got this big decline. Then on this run up right here, we were able to come back, and we came back really quick once we started to trend up. Now, another thing that I didn't do back here was I didn't use the inverse ETFs on these drops. We were trying to just stay focused on the system we go through. I go through each week with you, to where we're just always going to be long. And remember, with those inverse ETFs, you're not worrying about the buy signal. You're just purely using it as a hedge, and probably would have come back a lot quicker on these drops, or it would have held up a lot better on these drops if I jumped into some of those inverse ETFs right away. So. But I'm telling you, you're going to see fluctuations in your account. And I wanted to have that. I was kind of glad that we had it drop early on, because then you can, well, first of all, you know that it's not always going to go straight up. It never does. But then I wanted to be able to show that you could come back from a decline just by being disciplined with the system. The system will allow you to climb back out of it and get back positive again, and then move up from there. And I am worried that if we do have another big downturn, that we're not in cash this time, but we are hedged a little bit with those inverse ETFs, so that'll help. But I do want to make sure that if we do get a flush out in the market, that I have to go to the sidelines again, we'll do that to where we can just continue to build from this point. All right, that's all I have. Let me double check on any final questions here. All right. Have a great holiday weekend, and we'll see you on Tuesday for the next market update. Bye, everyone.